So when we think about our own path to modernization framework, we sort of break it down into a couple of different steps. And I think what's most fundamental, and this really applies to almost any client, is you're obviously looking at data sources that can help you to better understand the risk associated with your clients. What are some of the options that are at our clients' disposal? And lots of times clients don't know what those options really are. And that was sort of the basis of that path to modernization, to give clients a framework by which they can understand where they themselves sit in that framework and that path, and some just general guidelines and tools to help them think about things a little bit differently. So a great example would be just on data sources alone. I think most people think about credit reporting agencies and some of the data assets that are out there, such as commercial credit data. How can we better understand payment data, public record information, demographics or firmographics on a business? And those insights and that data typically helps our clients to assess risk. And there's more to it than just that level of information. I think what we've seen is a trend, especially if clients are working more with small businesses, where there's a very strong commingling of finances between, for instance, the business or that small business and an owner's personal credit. So one of the great advantages that is out there, and it's not just Experian, there are other bureaus that and other credit reporting agencies that can help with this from a best practice standpoint, is to be able to provide data in a way that's more manageable for small businesses, that provides a perspective into not only how well the business is doing commercially, but how well are the owners, their own personal credit? And is there a way that we can take that data and specifically model it for small business delinquency? So, one of the things we've been finding and trying to help our clients with is the use of blended credit reports that will give you that glimpse into both the business's commercial health as well as the owner's personal credit history. And can you blend that information in a way and provide analytics that perhaps provides a risk into small businesses and small business payment risk? And that's one of the things that we've been doing more and more of, especially with the recent changes in the economy. And there may even be situations where someone has, or a business or a client is looking at not just um, maybe they do have access into consumer data, but they're really looking at it more from just that individual perspective, not necessarily a business owner perspective, or being able to model it and look at that data for small business delinquency specifically.